Hey, it's Coach D, your budget coach, here to give you some tips on how to enhance your finances. If you don't know, I'm a budget coach and I aim to help ambitious adults reach and exceed their financial goals while still enjoying life in the process. So, yes, I talk about budgeting, I talk about money management, different ways to manage your money, different tips, and all things like that. However, this month is Credit Awareness Month. So, this month I'll be sharing my normal budgeting tips, but I'll also be sharing some credit tips as well. So for today's video, I will be discussing how money management affects your credit. So today I'm going to share 4 tips. So let's get into it. Number 1, paying your bills on time. So often we say, "Oh, I'm going to pay this. I'm getting ready to pay this," and one day is won't hurt. One day is, but once we get in the habit of paying something one day late, then we'll make it okay for 2 days late. Then we'll make it for 3 days late. So just get your mindset on paying it early. We don't even want to pay it on a due date unless it's just the way our finances are set up, and our payday is that day, and that's what we have to do. But we want to get in the habit of planning ahead and knowing what we're going to be paying on our paydays and knowing how to pay our bills before we actually get to the due date. So when we do that, that way if something were to happen, if something were to come up, and guess what? We're already ahead of our bills. So if we maybe miss a paycheck or something comes up and maybe our check is wrong from something at the job or something at the bank, guess what? We are ahead. But if we do not get ahead and we kind of stay on the money, if anything happens, it'll throw us off. Your payment history is the largest factor of your credit score. So that is number one. That is the highest weight of your credit score. So just learning how to manage your money just so that you're paying your items on time is number one. That is key. And having a budget will help you with that. So the budget coach, as always, have your budget, create your budget, work your budget, use your budget, and pay your bills on time. Number 2, eliminating your debt. That's another part of money management. We want to manage our money so that we have enough to pay everything that we have due and also enough to pay down all of the debt we have to zero. Of course, we have some credit cards that, we get rewards for, so we use them, but we want to get in the habit of paying them off or not having debt on there for over a month or 2 months or, as soon as we can pay them off, we should be paying them off because we're paying interest, which is money just kind of going out the window. Yes, if we're in a tight bind and we have to use our credit card and we need it, then that's what we have to do. If we're in a situation where we have to use our credit card, by all means, we have to do that. That's what we have a credit card for, sometimes for an emergency. But when you can, as soon as you can, you want to pay it off because your debt, the amount of debt that you have, your debt to income, that is the second largest factor of your credit score. So managing your money to where you're able to pay your debt and eliminate your debt, that will also increase your credit score because that is the second largest factor of your credit score. And that will, as soon as you're paying things off, as soon as it hits your credit report and your credit report shows that that debt has decreased, your credit score is going to increase. Now, don't be the person that pays your bill and then guess what you do? Use it. Oh, I paid $40. Let me go use 35. I'm not going to use all of it. Don't be that person. Okay, so we paid it off. We want to keep it paid to where it is and work on paying it further and further down. Sometimes we want to use our credit card because we don't want to spend our cash, or we want to go ahead and use our credit card and save our cash. But just keep in mind, when you do things like that, you are increasing your debt. You are paying more for something than you don't have to pay because you have the cash. Unless you're doing something like that for rewards and you pay it back, or you use your card and then pay it right back with the cash, okay. But don't be the person that's just like, oh no, I'll pay it next month when the bill comes. I'll put that 40 back on. Because then you're in the cycle of using it, using it, paying it, and guess what? It's not going down. It's staying right where it's at. If anything, it might be going higher because you're getting the interest added on every single month. So we don't want to do that. We want to get away from that. If that is something you're doing, try to stop that now. Look at how much your minimum payment is versus how much interest you're paying for that actual monthly statement. You'll see how much of your payment goes to interest. So when you do that, where you pay it, use it, all you're doing is paying them that interest and you continue to owe them roughly the same amount of money. So we don't want to work backwards. We want to pay that off and get to increasing our credit score so that we can get a better interest rate. So if we did have to use our card or we did have to keep money on our card, we're not paying as much back in interest. Number 3, Managing your expenses. Another part of money management is managing exactly what you have to pay, knowing where your money is going. So when you manage your expenses, you know how much you have to pay out. You know how much your debt is. You know what you have going on. You literally know what everything is. Like, I pay this bill, it's $48 every month. When I pay this bill, sometimes it's 110, sometimes it's 112. Knowing your expenses helps you to manage your money better because you can plan ahead. You know what you're doing when you're working with your budget. If we get to a point where we don't know our expenses and we keep spending and spending and we don't know how much our bill is going to be until we actually receive it, that will put us in danger of having more debt than we can actually manage. You can't manage what you don't measure. So you have to know exactly what you have going on. You have to know what your expenses are so that you can properly manage them and properly pay them. You need to know you have this much expenses so that you can make sure that your income covers that. Or if not, then you know you need to increase your income or you need to decrease your expenses. But when we don't keep track of it, and then sometimes we can just keep building and building our expenses. So when we have our credit card, say we use it, and our bill might be $25 a month. But we continue to use it, and next month it's $80 a month. Now I don't have enough to pay it. That puts me in a predicament where I am forced to borrow more money or get more credit, making me go get something that I do not need, something bad like a payday loan, something bad like a car title loan, something just as simple as another credit card. These things, and then when you get the inquiries on your credit report, that also is not the best thing. You don't want that. Yes, you apply for things, you have to apply for things, but don't be the person applying for 10 things because that ultimately will drop your credit score. We want our credit score to be as high as it can be. So when we do need to do things, we can do it with a better interest rate to benefit us. Number 4 is check your credit report. I asked, when's the last time you actually checked the credit report? Have you looked at it? Have you seen what's on it? Have you checked for errors? Have you checked for accuracy? That is another thing that is a part of managing our money because we need to know what we have going on and what's being reported for us because our credit ultimately affects our finances. Because again, when we want to do things like buy our home, buy that car, trade in that car, refinance something, we need to know what will be judged. So not checking your credit report will put you in a predicament where you don't know what you're up against. It leaves you not as prepared as you could be. Checking your credit report, you could find an error. Maybe not all the time, there might not be an error. But if there were an error, you want to check it, you want to find it and get it removed as soon as possible. That will, one, increase your credit score, but two, it will have the accuracy that you deserve. So you want to have a goal set for how high you want your credit score to become and work towards that. Always know where you stand because, again, can't manage what you don't measure. I hope these tips were helpful for you. I hope you enjoyed hearing a little bit about credit this time. Have an amazing day. Happy budgeting. If you're not subscribed, subscribe today. We go live every Tuesday for Talk Tuesday, and we post a video every Friday at 6 a.m. Both times are Eastern time. Again, I am Coach D, your budget coach. I look forward to seeing you in the future. Leave a comment. Let me know that you stopped by. Let me know where you're from. Tell me something. And if you're someone who wants to know your money personality, I'll put the link in the caption, which will link you to my free money personality quiz because knowing how you react to money will definitely help you to manage your money better. Have a great day.